In this video, we're going to find out what to invest in 2020. Let's find out. Welcome to A Poor Millionaire. My name is Curtis, and today we're going to talk about all the things you should invest in 2020, because I know exactly who you are and what you need to invest in, which is absolute BS. All these videos, you know they're coming. Get ready for the videos. What to invest in 2020, what to invest in, and everybody thinks they know what to invest in. But it comes down to this. Here's the biggest problem when you start off this video. Let's say the video title was 5 things to invest in 2020, right? The biggest problem is what kind of investor are you? How much money do you have to invest? Where are you on the investing education? All these questions are going to change what the best 5 investments for you. If you're not Donald Trump, let's pick another real estate mogul. If you're Mr. Giant Tycoon Real Estate Mogul, is that going to be the same as a guy who's working a 9-to-5 job who's got maybe $20,000 up and he wants to invest that? Are those going to be the exact same examples? No, they're not. So everybody, it's going to be different. What to invest in 2020 really boils down to who you are and where you're at on the pole. Are you a guy just starting out, or are you already a millionaire? Which one are you? Are you and what kind of a millionaire are you? Are you a poor millionaire, and how poor are you? Are you a millionaire where you're only a millionaire because when you add up all your toys and your house and your boat and you minus it all out, you're a millionaire? Or are you a millionaire because you have rental properties and because you are somewhat financially secure? All these things are going to change. If you're working a low-end 9-to-5 job, what you should be investing in is 100% different than a high-skilled, high-paid employee who's making a ton of money and has lots of money to invest, or already has money saved up, or already has investments. These are 2 different people. And then, of course, you got the independent guy, or the guy who's already retired. So here's 2 different ones. I've just mentioned 4 different scenarios. One scenario, you're just starting out in life. Let's say you're 20 years old. You just got a job. You're not in college. You're low-skilled, low pay. You're making barely minimum wage or a little bit above minimum wage. You're barely existing. That person's got an investment strategy they need to follow. And the next person on the totem pole is a high-skilled employee who doesn't have any savings and who just started out, but they just got their high-paying job, and now they need to figure out what they're going to invest in. The next step would be a person who is actually semi-retired but has investments or passive income that's already feeding them, and that's pretty much the stage I'm at, where what you would consider retired, because I don't have a 9-to-5 job, but I still have investments that pay my income, that pay my stuff. That's another type of investment. Then you've got the uber rich guy who's buying whatever he wants to buy just because he wants to, and he can afford anything he wants. The different strategies for different people. That's the main thing you got to get. You got to understand. Everybody's going to be out there with that great piece of advice. Hey, you should invest in stocks and bonds. You should invest in dividends. You should invest in real estate. No. What you should do is you should look at your situation and figure out what is going to bring the most value. And that is what an investor does. An investor looks at the situation. He looks and he does the numbers. What is going to give me the highest rate of return? When you go to buy a real estate property, you look at all the real estate properties and then you do the math. You say, hey, is this going to give me a high rate of return? What's my rate of return on this? What's the next one? How much money does that cost? What kind of a loan can I get on that? How good of a return? What's my percentage? What's my ROI? Rate of return. What is it on that property? What is it on this property? Same thing with stocks and bonds. You look at the stocks and you go, which stock has is it the lowest price? Why is it a low price? Is it a low price because the market is a low price because they're having trouble, but they're about to turn it around? There's a million reasons why a stock would be devalued. Is it devalued because it's not sexy? It's just a normal stock. It's not Tesla. Tesla's sexy. Everybody wants to invest in Tesla. What if it's like coal company that nobody's ever heard of, and it's not sexy? In fact, people don't want to invest in it because it's coal, right? But at the same time, though, it's devalued because of some weird thing. But they've already fixed whatever that weird thing was. They had a catastrophe. Now all the mine's fixed. Everything's working. The stock's below what it was trading at, and you're like, hey, I think that stock's going to go up. That's finding value, finding investment, and it's also education. If you don't know anything about the field that you're in, you're going to need to get educated. Education takes time, effort. You got to put in your time. If you're starting out in real estate, you got to get educated. You got to put in your time, and you're going to make some mistakes. And if you can't afford it, if you're just starting out in life, you can't really afford to make mistakes. A big mistake could set you back years. But and every once in a while you get lucky. I've gotten lucky a lot of times in my life where I've invested in something and I've just basically been a shot in the dark. My first real estate project was a shot in the dark. But I checked the numbers and I rechecked the numbers and I looked at them and I said, there is no way. And luckily, at the time that I invested in the market, there was no way I could lose money on that property. When I bought it, I bought an eightplex and I bought it outright for cash and I paid $130,000 for it. That was my first real estate investment in that area. It is a low income area and it was stupid to do it. But at the same time though, it was a calculated risk. I did all the math. One unit had an on-site manager, so really it was 7 units. Then out of the 7 units, 2 rented units weren't even rented or had rented. So 5 units were producing enough income where I could pay the bills, and also on top of that, I owned it outright. So I had a huge margin of error. I could suffer huge margin of error on that without losing it. I would never lose it because the bank's not going to lose it. So at the absolute worst case scenario, I'd end up making like 5% on my money, which I would thought would be a nightmare. But in the best case scenario, I was looking at 30 to 40% return on my money. And I said, well, it's a no-brainer. The worst case scenario, I beat inflation and I worked my butt off and I learned some stuff. The best case scenario, I'm making bank. So what I did was I bought that property. I fixed up the 2 units. I put money into it. I rented out the whole thing, all 7 units. Now, I still own that property to this day. It's my first real estate property in a really bad part of town. But I learned all the different, that was basically me planting my flag right in the middle of territory that I wanted to take over, right? And it was the first real estate property, and I've had it this entire time. And it still produces the rent over the year. When I first bought it, I think I was getting $400 a month in rent. And I instantly started raising it to $450 because I knew it was below market. Now those apartments, I've fixed them all up. I've done remodels, not super high-end remodels, just basic tile, carpet, fresh paint. Fixed it all up. We fixed up all the units, and then now that property is worth probably about three times what I paid for it. And then on top of that, those rents are double now what they were. Now that is a real estate risk investment. All right. Not everybody's going to have $130,000 that they can just dump into that. And I did it. It was high risk and it was high reward. And at the time, I had what I was going from is I was stock trading and I was kind of day trading and I was making money. But the market changed on me and I suddenly started losing money. And when I started losing money, I was like, I want to get out of the stock market. The stock market stinks right now, but real estate looks good to me because these numbers, they are too good to be true. So that's the reason why I moved all my money out of stocks and I moved straight into real estate. And when I moved into real estate, I knew a lot about real estate. I'd already done a lot of I'd read the books. I'd gone to a seminar or two. My father was in real estate before, so I had a pretty good knowledge of it. I'd already been in construction, so I already knew construction backwards and forward. I wasn't scared of construction. I wasn't scared of hiring and firing people, and I knew that all those different skills I already had. So all I needed was the skill of this area and this is a rough area that I bought this house in. But luckily, eightplex. Rough area I bought this eightplex in, but luckily, I got lucky and everything worked out. I've continued to make money on that property every single month, all the way till now. So guys, back to my original point. Every single investor is going to be different. So in 2020, what you need to do is you need to sit down. Number 1, pick some goals. Let's say you're low income, you're just starting out in life, and you want to save $1,000. I'm going to pick the lowest possible amount. $1,000, and all you're going to try to do is save $100 every single month for an entire year. What are you going to do with that $100? Now, if you have that $100 and you want to learn some stock trading, you could get you a Robinhood account and start putting that $100 into Robinhood. Now, here's the crazy part about this. Now, you're taking a little bit of risk if you move that $100 into a stock every single month. What you need to do is have your pulse on that and make sure that if those stocks start dropping, because I have a feeling that in 2020 we're going to have a recession. We could even have a stock market crash. So if you do put your money in the stock market, this is one of my investment advice. I've got a few investment advice. Obviously, the first one is figure out where you are, what type of investor you are, where you are in life and what you want. The next one would be very careful on what you invest in 2020. Make sure what you're investing in isn't overvalued. That is like the main thing. Guys, everybody, when everybody's buying stocks and the stock market's going up and up and up and up, you got all these suckers coming out buying more and more and more and more. The price keeps going up, right? And then when it drops down and then it's a bargain sale, nobody's buying, right? The price has dropped and everybody's like, oh, well, I'm not going to buy anything now. Everything's super high, everybody's buying. All right, you're getting slaughtered up here, and you're not buying down here where you should be buying. Right now, the stock market's high, and it just keeps going higher and higher and higher and higher. Yes, it could go up higher, but you need to be prepared for when it drops. And when it does drop, that's like a fire sale. That's the time to really buy. That's the time when you really buy, and then real estate has a tendency to stay a little bit more consistent. We still have those big swings whenever somebody screws up and they give out too many loans, and then those loans start coming in. That's great time for real estate. That means everything's a fire sale, and you can come in and scoop up good real estate deals then. That's when you know things are at the low point. But you've got to figure this out for yourself. You got to get the education. That's my third thing on this list, is you need to be educated on what you're doing. If you're going to get a Robinhood account, you're going to put $100 in a stock. You need to read about that stock. You need to keep abreast of what's going on. Let's assume that you buy... I'm going to pick Tesla because you know what Tesla is. I'm going to pick something you know. All right. Obviously, Tesla stock's like $300. So more than likely with $100, you're not going to be able to buy Tesla. You're going to buy something else. But let's just pick let's assume Tesla is cheap enough for you to buy. You're going to buy Tesla. You need to keep up with what's going on with Tesla. You need to read the news on Tesla at least every day. Every day you need to read the top news story on Tesla. So you know everything there is to know about that investment. And the same thing with everything else. And you need to check on that price every single day, because if that price goes, what's the market doing? Are we immediately in a recession? Are we talking about we're about to hit a giant swing in the economy and we're going to get the whole market's going to crash for a while? And the market crashing is a good thing, not a bad thing. If you got your money in Robinhood, the market starts to crash, yank your money, wait for it to crash, and then put it all back in at the low level on the bottom floor, and then let that money rise up. Even if you lose, let's say you got $1,000 in the market, right? You lose like 20% because the market's crashing. Now you only got 800. You immediately dump everything, right? Market keeps crashing, goes down to 60, 70, right? No problem. You buy in when you finally realize, okay, it's starting to hit that bottom and it's starting to go back up. You buy in at that bottom, 60% of what it was, right? 60, 70%, and then you follow it all the way back up to the top, and you can still leave your money in there and just let it grow, and you know it's going to just keep on growing because you're going to get that value back. So even if you do lose a little bit of money because there was a crash, just make sure you get out, wait for it to completely crash, get back in, and ride those waves. You got to ride that wave. Ride it up. And don't freak out. You lose a little bit of money, that's part of the deal, guys. Sometimes in stock investing, you lose a little bit of money. Don't panic, don't jump out, all right? Because sometimes those stocks will just do a little bit of a dip, and then what they're doing is they're just dumping all the people who panic, right? And if it's just a little dip, and you've kept up on the news, and you know everything's going great with the company you put your money into, you know the market's solid, everything's going great, then that little dip, there's nothing for you to worry about, right? What we're looking for is the crash. If you see a crash, get your money out and wait for it to hit the bottom. Once it hits that bottom, get your money back in and ride that wave back up. Guys, this isn't rocket science, all right? It's just, really, it's dealing with your own personal emotions. Stock trading is dealing with your own personal emotion. I don't do a lot of stock trading. So really, if you're really interested in that, you're going to have to find another channel to look that up and do that stock trading. Now, then one of the other things that I see a lot of these guys on YouTube saying is you guys need to put your money in a savings account at 2%. All right, I'm going to say right here and right now, I think you're foolish. Now, obviously, if let's assume you're just starting out in life and grandma hands you a $10,000 check and you don't have a clue what to do with it. You already own your car and you've got an apartment. Because if you don't own your car, then the first thing you should do is buy your car outright. Why do I say that? If you buy your car outright, you don't have car payments, you're not paying the bank or credit cards or any other people loan money. There's a percentage on that. Young person with a car payment, usually they're paying somewhere between, it could be anywhere from 7 to 10% on that car. All right, that's free money. Free money. When you get 7% interest, you pay off your car. Now you're not paying that interest anymore. Now, also those car payments, instead of them going out the door, they stay inside. So if you're paying $500, now you get to keep that $500. And guess what you do with that $500? You invest it. You start taking that $500 and start investing it and building you a stock portfolio or building up to save up to buy real estate. All right, back to my original example. Grandma, you're just starting out in life. You get a $10,000 check. You don't know anything about the stock market. You don't know anything about real estate. You don't know anything about starting a business. You take that $10,000 check. This is like the only time you should put it into. And like I said, you already own your car, so you don't, and you have no credit card debt. You're 100% paid off. You have zero debt, but you have $10,000. You don't know what to do with it, but you don't know anything. Then, and only then, in that scenario, would you take that money and put it into a 2% savings account and get your 2%. Now, finding a 2% is pretty hard. You can find 1.8, 1.9, but there are some 2% out there, and it kind of fluctuates. 1 month you get a 2%, the next month it's 1.8. So that is a scenario where you take that money, but that is only a holding account. That's only so that you don't feel like you're losing money. That's it, because you're going to need to find a better investment. And if you're just starting out in life, you've got the money, you put it in there. That's great, because you've got your car paid off. Now you're putting more money aside for savings, and you've got options. Now you have to decide to yourself: do you want to start a business? Do you want to do real estate? Do you want to do stocks and bonds? Are you going to invest in your education? Are you going to take and try to get a higher skill job? Are you going to try to become a welder or a plumber or a salesperson? And ideally, I am biased. I always say salesperson. Salesperson is the greatest way to become, to work towards becoming a business owner. And business owner is the holy grail for making money, guys. Business owners make the money, right? Then from business owner, you become a investor. And then from investor, you start buying real estate. There are keys to success in life, and this is the easy way. You want to do the hard way? There's always a hard way. You can go get a high-paying job, go to college, spend 6 years, get you an engineering degree. Yes, you're going to come out of college, you're going to be making $200,000 a year. But then the government's going to take half, basically. So then you're back to making $100,000 a year. But you just spent all this time, plus you got all these friends, plus you probably got a significant other that wants to spend a little bit of your money, and suddenly all that money starts getting gobbled up. If you, instead of going that 6-year college, you jumped in and became a salesperson, within 1 or 2 years, you're making $100,000. You start dumping that money into savings. You're still a young person. This is how you become a millionaire by the time you're 30. All right? Quick and easy. If you're starting out and you spend all your time in college, and then you start making some good money, but then the government's taking half, it's going to be really tough to get to that $1 million. It's going to be really tough to get financially independent. So investments, every person's different. We started off with the basic person, just starting out. You've got a little bit of money. I'm assuming you can only save $100 a month. You take that money, you can put it in Robinhood, or if you don't know anything about stock market and you want to spend the next 2 months, you can also paper trade. Instead of actually spending that $100 and buying a stock, what you can do is you can pick a stock. Say you bought it on XYZ day. Say on Tuesday, Tesla was trading at $300. I bought it on Tuesday at $300, right? Then you can say, I think it's going to go up over the next week because of XYZ. And then you can pay attention. Did it go up over the next week? What had happened to that stock? Did it go down? Did you lose money? How much money did you lose? Paper trade. There's actually programs that'll help you paper trade if you look them up on the internet. You can actually log into the pair and it'll give you a fake money that you can play with, and you can act like you bought the stock, and then you can act like you sell the stock and then see how much you've lost. All right? So there's a million ways you can get educated on how to invest. Now, obviously, the main way is you're going to have to get into that thing and do it. And sometimes you're going to fail, period. So the idea is to make sure that when you do start out and you do fail, that your failure is either A, you've got plenty of, like when I bought that property, I could have had only 2 units rented and I still would have been able to pay my taxes, and I still would have been able to keep that building with just 2 units. All right, and I already had 5 units, so I didn't see any way I was going to lose money, and I didn't lose money. So it was a calculated risk that paid off. And the same thing when you do real estate. When you buy your first real estate property, guys, you're going to have to take a risk. You don't know what you've never owned a real estate property before. You don't know what's going to happen. You don't know what it's like to deal with renters. You don't know how they're going to lie to you. They're going to say, hey, I'm going to have my rent. The first comes around and it's time for them to pay. And they're like, hey, I'm going to have my rent, but I'm only going to have it on the 15th. Don't evict me, man. Don't evict me, bro. I'm going to get t-shirts that say, don't evict me, bro. All right? Because you guys say, there's guys on the internet got their t-shirts say all sorts of stuff. Mine's going to be, don't evict me, bro. You know what? Here's the deal. I evict, period. If they don't have their rent at the beginning of the month, I immediately start the eviction process. The eviction process in Texas, luckily, only takes about a month. But I start the process, all right? But that costs the renter more money because now the renter has to pay for the eviction costs. But that's not my fault. That's their fault. They still call me up and say, well, I'm for sure going to have my rent on the 15th. For sure. And I'm like, okay, well, no. I'm still going to have to file the eviction. Hopefully you'll have your rent on the 15th. You'll have your late fees and you'll have your court cost. And we won't. And when we go to court, I'll just write it off. And it's like, no, don't do that. I'm like, there's nothing I can do. It's automatic, right? So, and then you're going to learn all these lessons. You're also going to learn how to evict people because you get your first eviction. You're going to learn how to fix things because you're going to have to fix that first toilet. You're going to learn how, when a tenant moves out, how much damage they're going to cause, how much problems they're going to be, how often are tenants going to move out. These are things you have to learn if you're going to be in real estate. Now, if you're going to do a business is a whole nother thing. Each business is different. How do you start a business? You start a business by, number one, learning the business that you are going to start. If you're going to start a pizza place, my recommendations, go work at a pizza place. It's pretty simple, guys. You want to start a roofing company? Go work as a roofing salesperson at another company and learn everything there is to learn about that company and how they do business and figure out how that company operates. Not so you can undercut them, but so you can learn the business. And then got to be careful with people. You don't want to go and try to steal somebody's business, guys. It's number one, it's wrong. And then number two, you don't want to, a lot of businesses are successful because they have 100% of the business. If you take 50% of the business and they take 50% of the business, you both are going to starve to death. So don't go into somebody's business and try to say, don't go work for a pizza place and then open up a pizza place like literally a block over that's you could see each other outside the door. You're just having his business. All right, and then go after his basic customer database. You're basically mailing the flyers to the same neighborhood he is, and there's only so much business to go around to that guy. You're gonna mess yourself both up. So when you do go learn a business, make sure you're not going to interfere with that person's livelihood, because you're also dealing with people that are going to take care of you. When you go and work for somebody, they are training you for free. They're helping you along. They're paying you, and they pay you squarely. They treat you fairly. You need to be respectful to that. You need to not mess them over, guys. And this brings me in the second part. This is a different tangent. But guys, when you're in business, you need to be honest. All right, honest people make business. Honest people are people who keep employees. Honest people are people who make money, and honest people on a long enough timeline. Crooked people are always going to get found out, and they're always going to have problems. On a long enough timeline, if you're honest, you're always going to work out, and you're always going to succeed. That's just the way it is. So in conclusion, every individual is going to have different investment strategies for 2020. You need to have an investment strategy for 2020. You need to figure out where you are, what your goals are, what you want to accomplish by the end of the year, and you need to write those on a piece of paper. My goals by the end of the year, I'm going to go back to the very beginning one, because I don't want to leave out the guys who are just starting out in life. Just starting out in life, you have nothing. All right, I've been there. I've been there with a crappy car that's halfway broken down. I can barely afford to survive, and I needed advice, but unfortunately there was no YouTube back then. I had to just learn it on my own. I had to starve and figure it out, right? So I'm going to go to I'm going to start with that guy. The guy who just started out in life, who just moved out, who's on his own, he's barely making it, and you have to start from scratch. You need to figure out where you're going. You need to figure out how you can, if you already own your car, great. You're starting off great. If you don't own your car, you got those car payments, then your main thing would be your main investment is to pay off that car as fast as humanly possible. And don't buy a nicer car. All right? I fell for this trap like everyone else. Everyone else, you're like, hey, I gotta have a nice car. You buy that fancy car, it doesn't last, guys. It just doesn't. All right? Money lasts. If you invest, you save your money, you build a business, and your money makes you money, that lasts. So you got to figure out what your strategy is to get from where you are to where you want to be. You got to price out your goals. So your investment strategy for 2020, that's what you need to think about. You need to not think about what stock you're gonna, what specific stock, or the investment, the investment tip for 2020. The investment tip for 2020 is the same tip it is for 2019. Check the market, check your situation, check your finances, make your list of goals, accomplish what needs to be accomplished, make some money, save some money. Guys, you make a lot of money by saving money. Saving money makes you money. Real estate is the #1 best way to make money. Most multimillionaires made it through real estate or business. And those guys who own businesses, you know what they invest in? As soon as they get a business, they invest in real estate. So that's your top 2. Stocks and bonds is another great way, but it is a fluctuating. All right? If you're going to do that, you're going to have to be on that pulse every day, riding that. All right? And when you're in a bull market, you're going to make lots of money, and then that crash is going to come. So always be ready for that crash, guys. If you're in the stock market, you're going to play that. I've played it. I've made money in the stock market. I've lost a lot. I've made more than I lost in the stock market, but I moved out of the stock market. Once I started losing more than I was making, I moved out of that, and I moved into real estate. And real estate has treated me so much better than the stock market because I get those rental passive income checks coming in every single month without fail. And then on top of that, my real estate has gone up every single year in value I've owned it. It's never gone down. Now, in the future, it might go down 20%, but I'm not even going to sweat because I'm still getting that rent, and I know that real estate's going to recover. Investing in 2020, made simple, is do your due diligence, spend the effort, be educated, don't lose money, save some money, and guys, I'll see you in the next video.